Hello, in this video we dive into the world of accounting for non-profit making organizations. We'll analyze the receipts and payments account of Nkumba Football Club, which is a non-profit organization. We are going to see how we can prepare the income and expenditure account for the club, and then we shall also see how to come up with a balance sheet. So in this tutorial, we will explore the unique aspects of non-profit accounting, including the accounting treatment for donations, grants, and subscriptions. So the treasurer of Nkumba Football Club prepared the following receipts and payments account for the year ending 30th April 2023. That's the receipts and payments account of this club. But of course, you need to understand what is a receipts and payments account. Now, a receipts and payments account, this shows the summary of the receipts and payments that have been made during the accounting period or during the financial year for these non-profit making organizations. So you can look at it as the cash book of the club, which shows the summary of what the club has received and then what the club has paid out during the accounting period. The following information is available. We have balances at the start as well as balances at the end for the assets and liabilities. We have the bar stock, which is the current asset. We have the bar creditors, which is current liability. Bar wages outstanding, which is a current liability. Subscriptions due, that is a current asset to the club. Subscriptions received in advance, that is a current liability. We have bad debtors as well as the bar prepaid utilities. These are all current assets to the club. The club had the following non-current assets on 1st May 2022. Still they have more non-current assets. Up here we had current assets and current liabilities, but now here we have some information about the non-current assets at the start of the financial year, where you have buildings costing 10 millions, you have the equipment costing 4 millions, then bus stock costing shillings 300,000, got burnt due to a short circuit. Repair of the building was a major expenditure and extended the useful life of the building by an estimated 3 years period. Equipment and building should be depreciated 10% and 5% respectively on the cost value as at the end of the year. 40% of the utilities cost and caretakers' wages should be apportioned to the bar, but all the other expenses which are not unique to the bar should be charged to the income and expenditure account. What are the requirements? Come up with the accumulated funds. So determine the accumulated fund as at the start. Bad trading account for the period ended 30th April 2023. Then the income and expenditure account and the balance sheet at the close of the financial year on 30th April 2023. So part A, accumulated fund. Accumulated fund. Now accumulated fund is the same as capital for the profit-making organization. So here we call it accumulated funds. So when you see accumulated funds, then just know that they are trying to mean the capital of the club. But of course the terminology is changed. Here we call it accumulated fund. When it comes to the profit-oriented, that's what you call the capital. So accumulated fund on 1st May 2022. So here we are asked to determine the opening capital of the club, though we shall use the term accumulated funds. Now majority of these clubs do not keep proper books of accounts. They keep their accounts using single entry methods, so you will find that most of the information will be missing. However, to arrive at the accumulated fund on 1st May 2022, what you have to do, you have to get the assets at the start minus the liabilities at the start to get the accumulated fund. So the club had non-current assets They are the building and equipment as at the start, and these are the cost values for those non-current assets. So I'm going to get the assets minus the liabilities, then we shall be able to arrive at the accumulated fund of this football club. So for the buildings, the cost of the buildings, we know that is 10M as per the information, 10 millions. The equipment, that is 4 millions. That is 4 millions. So this gives us how much? This will give us 14 millions. So we have 14 millions for the current, non-current assets. Then up here, you have information about the current assets, the balances for the current assets at the start. You still include them in your working here for the accumulated funds. So stock in bar, that is 400,000. The bad debtors, that is 600,000. Then you have subscriptions due, which is 150,000 as per the information. Then you have prepaid utilities, which is 200,000 prepaid utilities. Then cash at bank balance, you move to the receipts and payments account. We see there was a balance of 3 million. So the club had some money either in cash or at the bank. So that is the 3 million. So you have to get the total assets figure. And first get my total current assets. I add them up, get their total, and that total is 4,350,000. So assets figure, that will be 18,350,000. 18,350,000. The current liabilities, of course, here we have the back creditors. The opening balance is 500,000 as per the information given. Subscriptions in advance. The club received some subscriptions from the members in advance. This is a current liability to the club. Income received in advance, the current liability. The subscriptions in advance, they received the 300,000 in advance. Then bar wages outstanding, that is 150,000. When you add these, the current liabilities, we come to 950,000. So the accumulated fund is total assets minus the liabilities, giving you 17.4 million. So that is the accumulated fund of the club as at 1st May 2022. You simply get the assets at the start minus the liabilities at the start, determine that accumulated fund. That is in case it has not been given to you. Then BAT trading account for the period ended 30th April 2023. BAT trading account. Now, when it comes to the BAT trading account, sometimes you find that these non-profit making organizations, yes, they are non-profit oriented, but you may find that they have some side businesses that they operate. You may find a club having a bar. You may find a club having a restaurant somewhere. But of course, now these side ventures, these are profitable ventures. So the profits from these side businesses, of course, those profits are a main source of income to the football club or to any other organization. So we have to find out the profits from those profitable ventures. So in this case, the club has a bar which it operates. So we have been asked to prepare the BAT trading account for the year ended 30th April 2023. So here they want you to determine the BAT net profits. How do we get that net profit? We have to get the BAT sales minus the BAT cost of goods sold. We get the gross profit. Thereafter, we deduct the BAT expenses to arrive at the BAT net profit. Now, as I've told you, that these clubs or these organizations, most of them don't keep proper books of accounts, they use single entry. So we have to use the available information to see how we can get the missing information we need to come up with the different statements as required. When we look at the information, yes, we need bus sales, but we don't have information about the bus sales apart from the information about the datas, the credit customers, meaning that most of the transactions or most of the sales that were made by the bar, the sales were all on credit because we don't have cash sales in here, but we have information about the trade datas or the trade receivables. So we are going to use that information to arrive at the credit sales, and that's the figure which we are going to use in our bar trading account. So we are going to use the bad data's control account. This is what we are going to use to arrive at the figure or the credit sales, which we shall take up there in our bar trading account. Bad data's control account, of course, you need to enter the opening balance. This is the current asset, so it has a debit balance brought forward according to the rules of double entry. That opening balance is how much you need to check on the question, and then you see that opening balance for the trade receivables, that is 600,000. Of course, also enter the closing balance, that is balance carried forward, which we put on the opposite side, and that is 800,000. That is 800,000, your closing balance. However, when you look at the receipts and payments account, you will see that the club received 20 million from these datas. So complete double entry and credit the data's control account. Complete double entry and credit the data's control account. So here we have receipts and payments. That's where we're getting this information from. Receipts and payments. The datas paid some 20 millions, so the club received 20 millions. You don't have information about the discounts allowed, return inwards, bad debts. So you just need to balance this account, and then the balancing figure in the account that will represent the amount of the credit sales which you take to the bar trading account. So you take to the bar trading account, and how much is that balancing figure? That balancing figure is 20,200,000. So this represents your credit sales. We don't have cash sales, therefore in the bar trading account I'll take 20,200,000 as the bar sales. So these are the bar sales. Those are the bar sales, 20,200,000. We have to less the cost of goods sold, whereby we have to get the stock in bar at the start. So how much is the stock in bar at the start? That stock is 400,000 as per the information given. So we have 400,000. That is the opening stock balance. Then we have to add the purchases. We have to add the purchases, but still when we look at the available information, you'll see that we don't have any information about cash purchases, but we have the information about the trade creditors, meaning that all the purchases that were made by the bar, those were credit purchases. Trade purchases, we don't still have that figure, but we have information about the bar creditors. We have the information about the bar creditors, so we have to use the bar creditors control account to arrive at the bar credit purchases, which we are going to take to our bar trading account. Creditors, these are current liabilities, so the balance brought forward will appear on the credit side. The balance brought forward is 500,000. Balance carried down, balance carried down or carried forward as per the additional information. Trade payables, we have 350,000, so you enter that. No discounts received, no discounts paid, no discounts received, no return outwards. So we have payments to back creditors. Payments to back creditors, you see, according to the receipts and payments account, that's a credit. So in the trade creditors control account, you have to complete double entry by debiting that account. So receipts and payments account, receipts and payments account, payments to the creditors, that is 8 millions as per the receipts and payments account, 8 millions. Balance the account, the balancing figure, that would be your credit purchases. That will be your credit purchases figure. And how much is that balancing figure? Let's try to balance up the account and let's see. Try to balance up the account. The balancing figure for the credit purchases, that is 7,850,000. So that's what I'll take up here, 7,850,000. That is the purchases from note 2, 7,850,000. That is the figure for the purchases. We don't have cash purchases. If you add cash purchases, then get the credit purchases plus the cash purchases, then you get the total purchases for the bar. But we only have the credit purchases as per the information. You can determine the credit purchases by preparing the trade payables or the creditors control account, as you have seen. So when I get the opening balance, when we get the opening bar stock, we add the purchases that were made. Of course, you get the cost of goods that was available for sale, but during the year there was stock burnt as per the additional information. We see bar stock costing 300,000 got burnt. So this will reduce the cost of those goods that are available for sale. So less stock burnt. Less stock burnt, that is 300,000. So we have to minus the stock burnt. Stock was damaged. Then of course I will also list the stock in bar at the end. Stock in bar at the end is how much? That is 600,000 stock in bar at the end, the closing stock. That is 600,000. So I'll get my cost of goods sold. Get my cost of goods sold. And that will be 7,350,000. That is the cost of goods sold. So now we can get our bar gross profit, which is the bar sales minus the cost of goods sold, and our bar gross profit is 12,850,000. Of course, we have some expenses which we have to minus. So we have to minus the bar expenses, where we have the bar wages, caretakers wages. Caretakers wages, you just need to get a 40%. This is 40% times the 600,000. That gives you 240,000 caretakers wages. Bar wages, I think we have some more information about the bar wages. You see the receipts and payments account. There is a 2 million payment for bar wages. But then the additional information we have bar wages outstanding. So meaning that there is an opening bar wages outstanding. So the company had a liability for bar wages at the start, unpaid wages for the bar at the start, and even at the end they still have some outstanding bar wages. So what I'll do, I'll come up with a T account to find out exactly how much should go to the trading account. Bar wages, we see an opening balance initially. The balance brought forward on the account. There is an opening balance. The bar wages outstanding of 152,000 as per the information. But then even at the end of the year, the club has a balance. It's a balance carried forward, outstanding bar wages, that is 250,000. The receipts and payments account, a payment has been made for the bar wages. Receipts and payments, we see they paid how much. Receipts and payments. Receipts and payments as per your receipts and payments account, bar wages 2 million were paid. So you complete double entry and debit the bar wages account 2 millions. 2 millions. Balance up the account. I've already told you that these clubs do not keep proper books of accounts, so most of the information will be missing. So you'll use control accounts or T accounts to make the necessary adjustments, and then you arrive at the missing information which you need to use when completing the final accounts. So when I try to balance this account, you will see that the balancing figure, that is 2.1, and this now represents the bar wages expense, which you take to your income, and the expenditure account, which you're going to take to the income and expenditure account, which you're going to take to, since we have to prepare the bar trading account, this is what you take to the bar trading account. That's what you take to the bar trading account. That's what you take to the bar trading account. That's what you take to the bar trading account. So I want to make that here. Bar trading account. You take a 2.1 in the bar trading account as the expense. So bar wages. So we are taking bar wages. We are taking 2.1 as the expense. 2.1 as the expense. Utilities, still I see you have utilities that were paid during a period, but then still the club had prepaid utilities balance at the start as well as at the end. So you still prepare the utilities account. You have to prepare utilities account. Utilities prepaid, prepaid utilities, that's an asset to the club. So I'll enter the balance brought forward on the debit, that is 200,000. Then the balance carried down, I'll put it on the opposite side, balance carried forward, that is 300,000. That is 300,000. But during the year, of course, from the receipts and payments account, from the receipts and payments, we see that the club paid 1,450,000 for utilities. We take you there. Let's confirm. Utilities, they paid 1,450,000. So you have to debit that, the utilities account. You have to debit that in the utilities account. Then you balance up the account. Let's write balance it up to see the balancing figure. So total, that is 1,650,000 the totals. But now we have to see, according to the additional information, we have been told that 40% of the utilities and caretakers' wages should be apportioned to the bar. 40%. So utilities, we are going to split them. There is what goes to the bar trading account. There is what will go to the bar trading account, and that is 40%. That is 40%. We go to the bar trading account, and then income and expenditure. Income and expenditure account, you will take the 60% there. Take the 60% to the income and expenditure account. So this the expense for utilities has to be apportioned, as we are going to see. So I have to get 40%. Get 40% times the total minus this balance carried forward. That gives you 540,000. That is the utilities to take to the bar. Then income and expenditure. Now that will be the 60%. That will be this minus this, then minus this. That is 810. That's what we take to the income and expenditure account, 810. So in the bar trading account, utilities, I'll take the 540. That is the utilities expense, 540 from the working utilities, 540. Now the stock that was burnt, now that is an expense because that stock was damaged. It's no more, so that will be an expense to the club and to the bar as well. So you show that as an expense down here. So what you have to do now is to add up all those expenses one by one, get their total, get the total, which is 3,180,000. We deduct that from the pub gross profit, and then we come up with a net profit of 9,670,000. So that is your Kumba Football Club bar trading account at the end of 30th April 2023. So that is the bar trading account as you can see. The net profit is 9,670,000. Then the other requirement of the question is to come up with the income and expenditure accounts. on the balance sheet at the close of the financial year. Come up with the income and expenditure account and the balance sheet. Income and expenditure account. So let us draw up the financial statements. Income and expenditure account. Here, the income and expenditure account, you simply get the incomes of the club minus the expenditures. Get the incomes of the club minus the expenditures to come up with the income and expenditure account. You should be able to identify the incomes and then the expenditures. Now, when you try to look at the information given, look at the receipts and payments account. On the debit side, you have donations. Donations, these are incomes to the football club. Donations, received donations. We have the profit from the bar. Profit from the bar, that was how much the profit from the bar, because I told that the profit from the bar is an income to the football club. This football club is running a profitable bar, so we have profit from the bar. When it comes to we have now the club has what? The club has the club has the club has the club has the club organized some dances. The club organized some dances, and we see that it has dance receipts of 2.5. We have dance receipts of 2.5, and then we also have dance expenses. Still, we have the raffle receipts as well as the raffle expenses. Now, what do you have to do when it comes to these? The receipts, of course, they are incomes, but one thing you have to know is that there are some related expenses. There are some related expenses when you look at those receipts. So what you have to do, you can net off the expenditures. We can net off the expenditures against the incomes for the like items. That is where some sources of incomes have associated costs. The net surplus or deficit should be shown in the income and expenditure account. So how do we net off? What I'll do, of course, when we look at the dance receipts, are how much? The dance receipts we have 2.5, and the expense is 1 million. So what I'll do, I'll just take the profit in our income and expenditure account. I'll say profit from the dance. I just get it receipts 2.5 minus the dance expenses. We take the net, and this will give me how much? 2.5 minus the 1 million. That gives you how much? That gives you 1.5. That gives us 1.5 as the profit from the dance. Then when it comes to the raffles, still you do the same. Just get the raffle receipts minus the raffle expenses. Because the receipts are 1.25, the expenses are 0.25. So still there is a profit. So just take the profit, the net surplus. So this is 1 to it's minus the costs, the expenses, the associated expenses. That will give us how much? That will give us around will give us a profit of 1N. Profit of 1N. Then the other income is subscription income, but of course we have to find out exactly how much should be recognized as the income and expenditure account. So you will prepare a subscriptions account, because you see we have the outstanding balance, we have the subscriptions in advance, so we have to find out exactly how much we should take the income and expenditure account as our subscription for the year, subscription income for the year. So come up with a subscriptions account. Subscription, these are incomes. So we have the subscriptions balance brought forward. This is due, subscriptions due. The balance is 150, subscriptions due. That is the current asset of the club. Then the balance carried forward for the subscriptions due. Balance carried forward, that is 100,000. That is 100,000 balance carried forward. Then you have the subscriptions in advance, subscription received in advance, that is income received in advance. Balance brought forward, that is in advance. For subscriptions paid in advance or prepaid, that is the current liability, the opening balance, and that is 300,000. That's why I'm crediting it. Then I will still bring the balance carried forward on the opposite side, that is subscriptions in advance. And that is how much the subscription in advance, that is 500,000. But during the year, we see the club received some subscriptions of 7 million. So that will be credited in the subscriptions account. Receipts and payments account. Receipts and payments. Complete double entry with a credit entry. The club received 7 million from the members. When you balance off this account, the balancing figure will represent the subscription income for the year. And that's what you take your income and expenditure account. That's what you take the income and expenditure account, as we are going to see how much is the subscription income for the year. So subscription income, what you take your income and expenditure account. That's how much it's going to find out the subscription income for the year. That is 6,750,000. So that's the subscription income for the year. So you bring it here. 6,750,000. So those are the incomes, as you can see. So what you have to do, you have to add them and then get the total income. So income and expenditure account, get the total incomes, then minus the expenditures. Total incomes, we have 20,420,000. You have 20,420,000 as your total incomes. Then you have to list the expenditures. But now, what are the expenditures? Of course, we have club caretakers. Club caretakers, what wages? What was this? Club caretakers wages. Club caretakers wages. Of course, this will be 60%. This will be 60% times 600,000. Because 40% was taken for the bat trading account. What is this 60%? 60%, 600,000. That gives you 360. Hire of coaches, that is 700,000. Hire of coaches. Utilities, not for. Utilities, not for. Already have a working for the utilities. Working for the utilities. The utilities to be taken to the income and expenditure account. That is 810. Utilities. Utilities. Depreciation, buildings. We are told that the buildings were to be depreciated. Buildings were to be depreciated. Buildings to be depreciated by 5%. Yes. Buildings 5%. This will be 5% times. The cost was 10 millions initially. The cost of the buildings at the start, but there was a major expenditure that was made of 5 millions. Also been depreciated. So you depreciate 15 millions when it comes to the depreciation of the buildings. So that will be 5% times 15 millions. That gives you 750,000. Then for the equipments, you depreciate the equipments. So there is a 10%. 10% times how much depreciation of the equipment? 10% of 4 millions. 10% of 4 millions. 10% of 4 millions. That's how much? 10% times 4 millions. That gives us 400,000 as the depreciation expense. So what you have to do now is to add and get your total expenditures. We have to add and get the total expenditures. Those are the expenditures which we have. The expenditures for the bar, those belong to the bar, so you don't need to show them again here unless they were to be allocated. But this is what we have that will appear in the income and expenditure account for the club. So what you have to do now is to get your total incomes up minus the total expenditures, and you get a surplus. We call this a surplus of income over expenditure. Don't call it net profit. It's called a surplus of income over expenditure, meaning that the incomes exceed the expenditures. Surplus of incomes over expenditures. That is 17,400,000. Surplus of incomes over expenditure. We don't call it net profit. So if the incomes exceed the expenditures, then it's called a surplus of incomes over expenditures. What next? We have to come up with a statement of financial position very fast. The buildings, their cost is 15. Remember, the original cost of the building was 10 millions, but we are told that there was a major expenditure for the repairs of 5 million, and this extended the useful life of the building. So the repair costs have to be capitalized. We have to add them to the original cost of the building to make it now 15 millions. Equipment, their cost is 4 millions. Their cost is 4 millions. So what you have to do with the total cost, which is 15 plus 4, giving you 19 millions at the total cost of the non-current assets. But of course, these assets depreciated. The assets depreciated, so we have their depreciation, which you can get from the income and expenditure account up there. Equipment, Their depreciation is 400. So total depreciation is how much? That of the building plus that of the equipment. That is your total depreciation. The non-current assets. That is your total depreciation for the non-current assets. So we can get the net book value. Net book value is cost of the asset minus the accumulated depreciation. Cost of the asset minus the accumulated depreciation. And our total net book value for the non-current assets we have the two, that is 17,850,000. That is the net book value of the two assets we have. What next? Now we have to move to the current assets. We have to move to the current assets very fast. Stock in bar. Now here we use the closing balances because the balance sheet is prepared as at the end of the year. So we have to use the closing balances. Those are the balances as at 30th April 2023. So let's get those balances. The balances to use in the balance sheet, what we call the statement of financial position. So stock in bar at the end, that is 600,000. You have the bad debtors, that is 800,000. The prepaid utilities, the closing balance is 300,000 as per the information given. The subscriptions due, the balance is 100,000. Then cash at bank, that is now receipts and payments closing balance, that is 16,250,000. Current assets, they have some positive cash at bank balance. Oh, sorry, stock in bank, that is 600. This is 800. Bad debtors 800. Prepaid utilities, that is 300,000. The subscriptions due, that is the 100,000. Then cash at bank, that is receipts and payments. Yeah, cash at bank, receipts and payments. I told you receipts and payments same as cash book. Receipts and payments. It's a current asset of 16,450. So what you have to do now is to get your total current assets figure. Total current assets. So sum up the total current assets figure, which is 18,050,000. So what you have to do, you have to get the total assets, which is a total non-current assets plus current assets, giving you 35,900,000. We move to the funds and liabilities. We start with the funds, and under the funds we have the accumulated fund as at the start. So we have to get that accumulated fund, which we can get from our part A of the question. That accumulated fund was 17.4. You have to add the surplus of incomes. So if the club makes a surplus of income over the expenditures, of course the funds of the club increase. That surplus of incomes over expenditures is also 17.4, and this gives us the total funds, which is 34,800,000. So let's show the current liabilities. Current liabilities, we have the bar creditors, that is 350,000 as per the additional information. The closing balance of the bar creditors. Bar wages outstanding, that is 250,000. thousand. Subscriptions received in advance, those are incomes in advance, they are current liabilities. The closing balance is 500. So what's the total? This plus plus, that gives you 1.1. So the 34.8 plus the 1.1, that gives you 35,900,000, which is the total funds and liabilities. Of course, as per the accounting equation, your total assets should always be equal to the total funds and liabilities in this case. So that's it all. That's the question. That's what you are required to come up with. Of course, you have to practice more. You have to get more questions for practice. Of course, I will need to hear from you. So ask questions in case there is something which is not clear. Please ask questions. Post your questions in the comment sections. I'll participate and I will discuss with you to clarify doubts and foster the understanding. This is Senior Hamilton, your accounting tutor. Thank you for watching. Bye bye.